Hey, good morning, good afternoon, good evening. This is Ali Tarafter, your guide and mentor, and I put together this presentation for you today. For those who are looking at my YouTube channel, in reference to what we do. So, Best Credit Resources. I know a lot of people asked, "Hey, do you guys do funding, or do you guys just do credit repair and then corporate credit and all these different things?" Right. So, to answer the question more in depth, I put together this presentation. I had a very interesting call yesterday with some of my agents that asked me this to get more further clarity. Some of the people who are enrolling for the first time. And it's really my pleasure to give you this presentation to go through everything that we can possibly do to help you obtain the funding that you want. So let's go ahead and go over this presentation. So we're going to discuss what kind of funding that we provide, and that can range anywhere between 25,000 to even 5 million or more as we get more on the private side of fund of the transactions that you'll be doing. So let's look at the personal funding, right? The personal funding breakdown. Some of the questions I'm going to ask you is some things that you need to consider when you're approaching me or my company for funding or the agents that are working with me. It's very important to understand that there's a lot of criteria when it comes to personal funding. There's a lot of individuals out there who are financial professionals who claim that they can do that, but there's a series of criteria, excuse me, that you'll need to follow to best qualify. So let's go over what they are. The first thing you need to know is that we can typically provide unsecured funding, and what that essentially means is we don't need to take your asset, right? We don't need to take your asset, which means that you can solely get funding based on your credit score. Now, of course, there are a variety of factors that go with what kind of credit score you have and what kind of funding that you can qualify for. So let's go over what some of these are. So, like we said, if you want unsecured credit, you need to have good personal credit. That can average anywhere between 25,000 to even 250,000. Now, this range is very important for you to understand. The reason why there's such a range is because of the credit history you have, how long of a credit account or the accounts that you have on your reports, how long you've been with them, how long you've been doing business with them, what kind of history do you have? Do you have any late payments? Do you have any good accounts that you can demonstrate that, I've been paying them on time? I've increased my limits over the years, done great business with me. They're willing to collaborate with me. So all these type of things are very big factors when it comes to extending that range of funding. Now, of course, you want to have at least 720 plus credit score, which is your FICO score. Now, that's not a problem if you have bad credit, right? Like if you're not at that stage, but you have good accounts already, or you're looking to establish new accounts, we can help you. And we can do this by repairing your credit and providing you financial strategy and coaching and mentoring through establishing new accounts, right? So that you can actually go and establish that and build credit along the way so that you can qualify for the maximum funding that you need for your financial needs. Also, you want to know some of the risks, right? So we need to understand why you want the money in the first place, because one of the biggest rules of financing, we look at this like if it was our own money. And the reason why we say this, and I'm going to explain this down the slides here, is because we represent a lot of money. So with that, being said, I've gone through the markets when there was complete mayhem and disaster in 2007, 8, and 9. And one of the biggest things I learned is if you're not careful when it comes to underwriting, if you're not careful with the representations made, it can not just land me in trouble, but my clients as well as my lenders. So we have to be very careful when it comes to that. We have to assess the risks. And what that means is, like, do you have income that you can support the funding? Like, we don't always ask for documentation. We expect full transparency from your side. For you, if you're looking to borrow money, we want you to be honest with us, of course. But we expect full transparency, and if there are certain conditions that we need to check your documentation, we'll definitely let you know in advance if we need to go through that. Another thing is, like, we do something called stress testing, right? So based on whatever rates you can potentially get, if the rates were to jump to 30%, would you still be able to sustain that? And not just sustain it by minimum payment. I mean, would you be able to put some money towards the balance on a month-to-month basis, even at a 30% rate? And the reason we ask that is because, see, a lot of people get unsecured loan. And one of the things in unsecured funding is a clause in every contract is the rates can change without a fixed how do you say this, obligation to you, right? So they can say, look, today we're going to give you 19% and the rates are going to jump, and they just have to give you a notice in writing, and then from that perspective it can go south, right? So you have to be careful. So you have to assess the maximum unsecured rate at the 30% level. And are you going to be, sometimes it could be 35%, right? But would you be able to sustain it and put more money towards the balance, even at those circumstances? Now, if you can answer those questions for yourself and say, yeah, I'm positive I can do that, then that's the right time to go for personal funding. But if you say, no, Ali, I cannot do that, maybe it's not the time to get personal funding. Instead, what you got to work on is increasing your cash flow, maybe reducing some of your some of your balances that you have. Maybe it's time to look at getting lower interest rates and negotiating with your creditors. So all these type of things matter to us. Okay. Now let's go over the part one of business funding. We're going to break down everything here because a lot of people out there, financial brokers, are going to say, "Oh, we can do business funding. We can do business funding," and then they try to run around and send your applications to 100 different people. And now your file is just being shopped around, and it looks ridiculous. So we want to avoid that. Okay, we want to avoid that. My goal is to educate you, to make you more informed, so you can go out there and make the right business decisions when it comes to getting funding for your company. So this is one of the things that we're going to break down today. Now, one of the biggest things, of course, it's very basic, right? But do you have a registered company, like an LLC, C corp, S corp, sometimes even a B corp, which is considered a benefit corporation? So do you have any of that? Of course, if you're in business, you probably already have that. And at that sense, I'm going to ask you, do you have established corporate credit? And the reason I ask that is because if your business is fairly new, you're generating some income, that's a good place to be. But with income, you have to start looking at corporate credit because eventually that adds to the credibility of your personal file, right? Like if you don't want to guarantee it personally, then your company, you want everything to be on the merits of your company's income performance and its credit and its assets, then we have to think about establishing corporate credit because that'll only fuel the potential that your business can actually get more funding down the road as you're going for applications. Also, if that's the case, we also look at, okay, well, if you say we've established business credit, but I'm not sure where I stand, I don't know how much of a business credit I've established, then we look at, for example, getting the credit reports from DNB, which is done in Bradstreet, Experian Business, and also Equifax business credit reports. And the reason why we do that is because we want to see if what are some of the inconsistencies, what's the patterns, and all these type of things, because we don't have a magic algorithm, right? It's a question of underwriting like the old school way of assessing risk, of assessing your financials, your company's financials, and determining whether or not it's something that's feasible for you to get loans at this time. And what are some of the financial risks associated with you borrowing during the time that you want to borrow, right? So we also sometimes may ask, what is your previous 2 years of revenue in your business? How much has it generated? And of course, it's not just about the revenue, because you can make $1 million but be left with $5, right, at the end of the day. So we always ask, how much of that income that you generated, which is your gross revenue, in the past 2 years, have you brought in as net income? So after all expenses paid, all wages paid, everything that your debts and all that, how much are you bringing in your pocket from that business in the past 2 years? And the reason we sometimes may ask that is depending on the level of funding that you're looking for. We want to know whether or not you'll have enough in your reserves to be able to, let's say if something goes wrong, you can you can spend 6 months without income and you can still sustain it because you have a risk measure in place with your business and you have significant cash flow that can sustain the unique circumstances that you can fall under, unfortunately, right? So we have to look at those scenarios as well. And also, what are some of the outstanding business liabilities that you have? Now, we ask this question is because, okay, we can be a creditor and we can lend you money. We can underwrite your whole loan and we can go through the risk assessment and all these type of things that we need to look at. But the end result is if you're borrowing money to pay another creditor, we're in that position now. We're taking the risk of that initial creditor, right? Or let's say a group of creditors. And if that's the case, and if we're just consolidating your loans, we're not interested because we're in business to help you improve. We want to make sure that you're able to increase your revenues, your business is going to grow, and all these potential probabilities. So if we're just simply swapping position with another or a group of creditors, and we're just becoming like another lender that you're going to keep extracting, and then hopefully you're thinking to yourself, man, if I can't sustain, then I'll just go to another lender and do the same thing. We don't want to get into business due to speculation. We don't make bad business assumptions, right? So that's not where we're in the business for lending. So that's a question we always ask, right? So what are some outstanding business liabilities that you have? Now, going into part two of business funding breakdown. Now, let's look at some of these things, right? Are there any judgments outstanding with creditors or any collections that will, in the next 6 to 12 months, potentially hurt your business cash flow? And the reason why we ask that is, let's say if you have creditors that are out there that have issued judgments against you or warnings against you or subpoenaed you, as we're lending you money, what's going to happen now is your assets can be seized and we don't have a recourse. And then we're actually stuck now. So if you're stuck and you can't perform business because your assets need to be used, then we're going to be waiting in line to get paid for the interest rates and the monthly payments, right? So we look at that as a very serious issue. So we have to know this ahead of time when we go through the checks if we have to go through it. And this is especially true when it comes to asking for more money. We're talking like 200,000, 300, 400, even 500,000. But anything above that, of course, it's a unique circumstance, but we need to look at those scenarios because we got to be very transparent with each other if we're going to do business together, right? And also, do you see that your business have any assets, or can you use some of those assets to facilitate the funding? For example, if you're a manufacturing facility, you may have equipment. You can have, let's say, trucks. If you're a trucking company, you can have forklifts. If you're in a warehouse, et cetera, et cetera. So your assets don't necessarily have to be a property. Of course, a business, if you're running a business under a building, and if you own the building outright, then that's something that you can consider leveraging. But other scenarios, we have to think of what are some of the assets that are free and clear. Of course, if you have equipment, sometimes it could be based on equipment leasing and financing and some of the terms that you already have. So we can't really touch that because it's already obliged. But we have to look at some of the creative scenarios in which we can leverage your business assets, if you have any, of course. Also, if you're considering personally guaranteeing your business, because in those circumstances, it's like, okay, well, my business doesn't have any assets, it doesn't have any substantial revenue, it's getting there, we're growing, and we see potential. But maybe sometimes you just want to say, I'm going to use my personal credit score, and I'm going to guarantee this, and I'm going to get the funding. Now, the best part about this is when it comes to getting business funding, yes, it doesn't show up in your personal credit score, your personal credit reports, but it does give you inquiries. And of course, now let's say something goes wrong with your business, and you don't get to make the payments on time, or certain things happen, then those can come back to your report in a negative way. So you have to be careful when it comes to personally guaranteeing that. So you really want to step aside from that if you can, as much as you can, but it doesn't stop you from doing it, as long as if you're confident that the outcome of your business is going to be great. Also, in these circumstances, do you have partners that you want to bring on board, or associates that are willing to co-sign to work with you? And I say this because what happens is, some of these people say, well, I have 3 or 4 people or associates in my business have excellent credit, and sometimes we can get combined, individual credit. We give them individually a certain amount, and then that can be like a pool of different type of funds coming together under business partnership to complete the funding objective of your company or whatever you're looking to get. So that's an important question we always ask. Also, do you have any personal assets yourself personally that you say, well, my business doesn't have assets, it doesn't have the income that I need, my co-signers are not there, I don't have any other partners, but I do have personal assets, right? And if you do that, if you do have those assets, are you willing to pledge them to get the funding for your business? That's another question you got to ask yourself. So one of the biggest things I want you to take away from this is, if you have a legitimate business, and if you're really looking to succeed, and if you really want to take your business to the next level, some of the key considerations are to think of pledging your personal assets, as long as, of course, you get favorable rates and the outcomes are great, right? But you want to consider doing that because, again, you believe in your business. You believe in the outcome that your business is going to create, right? So that's something that you might want to consider. Now let's go over the part 3 of business funding. Now let's look at some key trends and strategies that will help your business generate more revenue in the next few months to years. Well, we ask this as a lender and a consortium of lenders is because we need to know that you're confident in your business. You've done your research, that you're going to sustain. You're looking for growth. You're looking to hopefully utilize some of our resources that we have as financial partners, as we're leveraging and lending you more money as you're growing, because we know you're responsible. We want to be there every step of the way and build those long-lasting financial relationships. But what are some of the key trends and factors that will help your business generate more revenue? And can you explain those to us, right? And if your business defaults, right, what are some of the recourses that we as lenders or our partners can have just in case? What are some of the things we can fall back on? Now, a lot of people say, well, at this time, I'm just starting a business, so I don't have any assets, but I'm going to be developing those assets. And as we're building those relationships, I'm willing to pledge them as a goodwill. Or if not, then we don't have any recourse aside from our personal credit. Then we have to look at those different scenarios depending on the type of funding you're asking for, what stage your business is at. We talked about that in finance talk. So I'm gonna ask you to seriously consider this, because this is something important. Now, if you're asking for more than 150 to 200,000, this is something that you gotta ask yourself and be ready to answer that. Okay. Also, is this your first business, right? Or do you have any other business entities, right? If it's your first business, we understand you're trying to just step up the game and trying to leverage and trying to borrow and trying to make something happen there, hopefully successful, and you want to grow from there, and you probably hopefully come back to us for more money. But if you have other businesses, right, do they operate? Are they successful? And if so, do you have assets with those other businesses that you want to cross collateralize, which is pledge those business assets to fund your existing business idea? And we ask this quite a bit because we noticed that some people have, let's say, 2 or 3 businesses, but when they're coming for money and they ask us, hey, look, can you help us with this type of funding? Can you help us? And what ends up happening, right, is we go through our due diligence, we do the underwriting, and we notice that that same person has business affiliations or businesses that with let's say two or three other entities. And unfortunately, during our underwriting process, we come to uncover that those two to three entities have defaulted in the past. Right? They don't have good financial relationships. There's still pending judgments against them and all these type of things. And even though there's a lot of people say, well, LLC, we can just get the funding. We don't have to worry. You can default on bankrupt, any type of LLCs and all that kind of stuff. That's just great. And yes, legally speaking, you're not liable for those other companies. But what happens is an underwriting, as we're underwriting that, and our lenders and our partners and our investors, we look through that. We already know, we make up our mind. We say, no, we're not going to take another risk on that. It doesn't matter what kind of LLC law protection you have or what kind of asset protection you have. If we don't give you money, then that's on you, right? So it's an end result is you got to be careful. And it's always good to be transparent. You have to explain your circumstances. Sometimes it's not your fault. Maybe you were in the housing market bubble crash and things went south and you weren't able to sustain. And everybody in that time era or period has gone through significant defaults. So it could be a forgiveness process, right? But end result is if you're not willing to be transparent and we don't know this and we uncover it through our due diligence and underwriting protocol, the possibility of you getting funding is very low. Okay, so you got to be careful with that. One of the things I want you to take individuals and we do business on a regular basis with them. And with that said, every deal that we decide to take on, invitation to those that we do business with. So if somebody defaults down the road and we know we're underwriting a bad loan just because he has credentials up front based on credit score requirements, right, or business requirements, but he has no policy of doing business properly, and he's probably going to default because we feel that there are financial risks down the road, and we still underwrite that. What happens to our credibility and reputation, right? It starts going down south, right? So we want to be very careful with that. So there are a lot of financial brokers out there who will take on any deal just to make a quick buck, right? But eventually, when the clients default because of bad risks and improper financial habits, right, the markets go tougher for those who are looking to borrow in the future, right? Those who want to benefit from that. So imagine, let's say you had a son or a daughter who wants to start the business down the road and you are not able to sustain your loan or you just made bad business decisions, unfortunately, because you didn't know any better, or you just the broker who actually helped you get that loan didn't give you the advice that, look, I see these type of risk and I want to help you, and then you decide to take the loan and he decides to ignorantly give it to you, and underwrite it. He's putting yourself, your children at risk as well, because if they want to borrow down the road, it's going to be all that much tougher and harder to get the loan because bad business habits, right? And because of bad broker behaviors out there who are just misrepresenting financial institutions, and they're not really looking at their well-being or the investors' well-being, and they're just looking for their money. We got to be very, very careful with that. And I take this very seriously because everybody that I speak to when it comes to underwriting, when they come for loan, personal or business or even institutional, I want them to know that this is something that you have to consider, because we're in business for long term, right? It's not a short term thing. I'm not going to be disappearing overnight. I have a lot of commitment to my clients, to my partners here, to you guys. So we have to work together. Okay, it's a shared economy, and we have to think of underwriting decisions that are going to positively impact both the client, our representations with the institutions, and the credit that borrowers receive from those institutions. This is very, very important. Okay, so I'm going to answer some of the questions that I got asked quite frequently. This is based on a conglomerate of, let's say, in the past 3 months. I'm taking the most obvious ones because I want you to get some clarity out of this. So the first person is, they asked me, can you help me get funding with bad credit? Now, my answer to that, of course, is I come back with a question. I say, well, it depends, right? Why do you have bad credit in the first place? And if so, then why would I want to help you? Because you're just going to make the financial system even worse, right? It's a careless behavior. So we got to analyze. With that question, my answer would be, first of all, it depends. What happened? How did you get bad credit? And secondly, Why do you need the money? And third, you probably should want to consider doing credit repair, because if you're serious and you really want to fix your financial condition and your financial circumstance, that's something that you want to do. Okay. Second question is, can you guarantee funding? Well, I mean, what kind of question is that, right? But I'm going to answer this right now. So when somebody says, can you guarantee funding? I cannot control the underwriting decisions ever. Okay. If my partner says, Ali, let's say they're with Bank of America, and say, look, we can qualify for looking at their file, but we don't guarantee funding because, first of all, in law, you're not allowed to do that. It's illegal, right? So the banks can actually legitimately lose their license for guaranteeing anything, aside from, let's say, some interest rates and all these type of things that are under insurance protection. But when it comes to funding, nobody can guarantee you. If the banks or institutions with billions or even trillions of dollars in assets, as a conglomerate, cannot guarantee that, you're asking the wrong question, which shows me that you're not really serious and you haven't borrowed money before. So you have to think that, what can I, and the question to ask is, how can I increase my chances of funding? That's the right question, right? Instead of, can you guarantee funding? It's not on me. The money's going to you. So you have to qualify for that. So what you got to say is, what are some of the things that I can do to increase my chances of funding? That's the right question, right? Another question I get asked quite frequently, which I find is disappointing, is, they come in and say, Ali, do you have a guarantor for me? I mean, seriously? Are you serious right now? Like, if you're asking if I have a guarantor for you, that means that you probably don't have solid credit. You want to hide something. And for me, like, I don't work with people who are not transparent, right? And first of all, I'm not going to give my guarantors, even if I do have, to somebody that I don't know, I haven't done business with. And of course, those who I do business with are usually financially responsible, right? So I wouldn't even have come to do business with somebody who's asking for a guarantor from my side. So we got to be careful with that question. And to answer that question is, no, I don't, because you have to qualify for funding on your own merits. We don't risk our guarantors for anybody else. Okay. The other question I get asked quite a bit is, others said that they can get me funding. Why can't you? Now, remember the question that we went over the slide, on this side? We talked about financial brokers giving funding to anybody and just brokering the deal just to make a quick buck. Well, I'll tell you something. If others said they can get you funding, you're free to go with them. I always answer that by saying you're free to go with them, and the reason we don't do it is because of quite a lot of risks we see, right? And we're going to be transparent. We're going to tell you. We're going to give you feedback. What are some of the risks that we see? And if you're not comfortable with that, then that's tough love, right? Because end result is, we cannot risk our financial reputation with our underwriters and our financial partners. We got a lot to work on. There's a great future for us. We're in this business together. My fiduciary responsibility is to make sure their money is well spent and not just frivolously spent on people who are not financially responsible. And that's your duty too. You got to show me that, yes, I am financially responsible, and I'm going to qualify for funding. And here's my criteria, and here are some of the risks, but I can overcome that because of A, B, and C, right? So you got to think ahead of time before you ask that question. If others can guarantee you funding, you got to ask them. If I'm not guaranteeing you, or not guaranteeing, sorry, if I'm not being able to give you that kind of funding, you got to ask me why. Ali, what are some of the things that are holding me back from obtaining the funding that you can provide? And typically, you want to be in a position where the tougher side of underwriting is approving you instead of the easy ones, because that will show that you actually have a very solid file. Another question I have is, I need money for my business idea. Can you help me? So we went through this presentation on Finance Talk. I'm going to actually share the link of that presentation below this video. But one of the things you want to realize is, that will depend on so many different factors, right? Like, if your business has an idea, or you have an idea for business, there's a lot of questions to ask. So based on those criteria, we got to evaluate, and there's a couple of steps to take before we can actually determine whether or not you can qualify for any type of funding. And first and foremost, you probably want to start with your own money, right? So you want to look at, Ali, I have a business idea. I want to qualify for my personal funding. What can you help me, or how can you help me to get that kind of funding so I can get rolling, and then eventually start enrolling some investors, or hopefully get some other funds to grow my business, right? So that's the right question to ask. So that's it for today. I appreciate you being here today and listening to this video. I hope I was clear and it was helpful. I understand that a lot of people have this question in particular about funding, and of course, Best Credit Resources. You're probably regularly hearing me out on Saturdays on Finance Talk, but this is my commitment to you. I'm going to shoot out regular videos like this to help you give more clarity. You can walk away with some value, and I hope that you took this presentation and learned something. Thank you once again. This is Ali Taraftar, your guide and mentor. As always, you can visit our website at bestcreditresources.com. I look forward to seeing you next time. Bye for now.